What if I told you that right now the IRS has a completely legal loophole that lets business owners save 10, 15, sometimes even $20,000 in taxes every single year? And what if I also told you that most business owners miss it, not because they don't qualify, but because they missed one single deadline? I'm talking about the S Corporation Election. And in the next 7 minutes, I'm going to show you exactly what it is, exactly who qualifies, and the specific month you need to file. Because if you get this wrong, you could be waiting an entire year to try again. I help business owners stop overpaying the IRS. So if you're running an LLC or a sole proprietorship and your net profit is above $50,000 a year, you are going to want to watch this video all the way to the end. Let's get into it. What is an S Corp election? First, let's make sure we're on the same page about what an S Corp election actually is. An S Corp is not a separate business structure you register with your state. It's a tax election, meaning it's a choice you make with the IRS about how your business gets taxed. Here's why that matters. If you own a regular LLC or you're self-employed, the IRS treats every single dollar of profit as your personal income. And on top of regular income tax, you also owe self-employment tax, which is 15.3% on all of it. That's Social Security and Medicare. And guess what? As a business owner, you're paying both sides of it, the employee side and the employer side. But when you make the S Corp election, you split your income into two buckets. One bucket is your salary, and yes, you pay payroll taxes on that. But the second bucket, that's a distribution, a profit distribution, and distributions are not subject to self-employment tax. That's the strategy, that's where the savings come from. Let me show you the math. Make it real. Say your business makes $120,000 in net profit this year. As a regular LLC, you owe 15.3% self-employment tax on that entire amount. That's over $18,000 just in self-employment tax alone, before income tax even touches it. Now let's run the same numbers with an S Corp election in place. You pay yourself a reasonable salary of $60,000. You pay payroll taxes on that $60,000, about $9,200. The remaining $60,000 flows to you as a distribution. Zero self-employment tax on that. Your total payroll tax $9,200 compared to $18,000. That's a savings of over $8,000 in 1 year from one election. And the higher your profit, the bigger that gap gets. Now here's where most people get tripped up. They hear this strategy and they think, okay, great, I'll do that. And then they Google it, get confused by the paperwork, and push it to next year. Don't be that person, because the deadline is not when you think it is. The exact deadline, the core value section. This is the part of the video I need you to pay close attention to. To elect S Corp status for a given tax year, you must file IRS Form 2553 by the 15th day of the third month of that tax year. For most businesses operating on a calendar year, meaning January through December, that deadline is March 15th. Let me say that again, March 15th, not April 15th. That's your personal tax return deadline, not some random date in the summer. March 15th is your S Corp election deadline. So if you want your S Corp election to be effective for the current tax year, you need to file Form 2553 by March 15th of that same year. Or, and this is equally important, you can file it by December 31st of the prior year. So if you want S Corp treatment starting January 1st, you can actually get ahead of it and file in Q4 of the previous year. Either way, the window you're working with is essentially from October of the prior year through March 15th of the current year. That's your golden window. Miss it and you're waiting 12 more months. What happens if you miss the deadline? Okay, so what if you're watching this and you already missed the March 15th deadline? Are you just stuck? Not necessarily. The IRS does offer something called late election relief under Revenue Procedure 2013-30, and here's how it works. If you missed the deadline, but you've been operating and filing your taxes as if you were an S Corp, meaning you've been running payroll, paying yourself a salary, filing the right forms, the IRS may grant you relief and backdating your election. But there are conditions. You have to file the late form 2553 with a statement explaining the reasonable cause for the late filing, and both the business and all shareholders have to sign off. It's not guaranteed, and it's a lot more complicated than just filing on time. How to actually file form 2553? Alright, let's talk about how you actually do this. Step 1. Make sure you meet the eligibility requirements. Your business needs to be a domestic corporation or an LLC that is elected to be treated as a corporation. You can have no more than 100 shareholders. All shareholders must be US citizens or residents, and you can only have one class of stock. Most small businesses check all of these boxes easily. Step 2. Download IRS Form 2553 from irs.gov. It's a straightforward form, about 2 pages. You'll fill in your business information, your desired effective date, and your shareholder details. Step 3. File it with the IRS by mail or fax. Yes, fax. The IRS still loves a good fax. You can find the correct mailing address or fax number in the Form 2553 instructions. It depends on your state. Step 4. Work with a CPA or tax professional to set up payroll and determine your reasonable salary. This step is non-negotiable. The IRS scrutinizes S Corps that pay zero salary, and getting this wrong can erase all your savings and then some. Let's bring this home. The S Corp Election is one of the most powerful, most underused tax strategies available to small business owners in the United States. If your net profit is above $50,000 and you haven't made this election, you are almost certainly leaving thousands of dollars on the table every single year. The deadline is March 15th. Put it in your calendar. Tell your accountant. Send this video to your business partner. And if you're starting a new business this year, remember the 75-day window from your formation date. Now I want to hear from you. Drop a comment below and tell me, are you currently an S Corp? Are you thinking about making the election? Or did you just find out about this today? I read every single comment and answer your questions. If this video helped you, hit that like button. It genuinely helps more business owners find this content. And subscribe so you don't miss the next video where I'm breaking down how to determine your reasonable S Corp salary without triggering an IRS audit. See you in the next one.